Hello viewers, welcome to my channel. I'm Hasham Ali Khan. How are you all? Hope doing great. Now I'm resuming the videos on theory and practice of GST. Already 2 units I have completed on this subject, theory and practice of GST. Unit number 1, I have explained you the meaning of the term GST. What are the advantages of GST? Then what are the taxes subsumed in GST? Registration process, then cancellation of registration, revocation of cancellation. All these things I have explained in the last 2 units. Now in this video, I am going to resume the discussion on GST. In this unit number 3, the topics to be covered are recording advanced entries, GST adjustments, and return filing. These 3 topics I'm going to cover up in this unit number 3. First of all, the accounting of GST transactions. So my suggestion, before watching this video, if you have not watched the first introduction part, you cannot be able to understand the meaning of the term GST. So I suggest you to go to the playlist of my channel, select the subject, theory and practice of GST. Watch the initial videos, be perfect on the concept, then you can come to this video. So in this video, 2 topics I am going to cover up: accounting of GST transactions and import and export. So these are the topics I am going to cover up. So before starting the discussion, take the screenshot of the points which I have written on the board. Then I'll explain all the provisions of GST Act. Come on. Accounting of GST transactions. Actually, the introduction of GST replaced all multiple taxes. So before the introduction of GST, there were multiple taxes applicable in India, like VAT, excise, then CST, Central Sales Tax, Service Tax. All so many taxes were applied before GST was introduced. But GST has replaced all the multiple taxes. And according to GST law, every registered business is responsible to prepare and maintain its accounts based on the GST rates and provisions. Now the new law, the GST law says, every registered business must record and maintain all the transactions in the accounts as per the rules and provisions given by the GST. So it is compulsory now. Every registered business has to maintain the accounts. Now previously, business person used to prepare and maintain their accounts for different taxes separately. Before this GST comes, every business house has to maintain the accounts differently for different taxes. For example, accounts are maintained for VAT, accounts are separately maintained for excise, accounts are separately maintained for CST, accounts are separately maintained for service taxes. Like this, different accounts are maintained for different taxes earlier. But GST says no need to maintain separate taxes for separate laws. Only one set of books of accounts must be maintained, which should comply with the provisions of GST. Now, if for instance accounts for VAT, accounts of excise, however, GST law replaced all such accounting requirements and instructed all the registered business of India, all the registered businesses, whether the registered business is transport or production or healthcare or any activity, any business, to maintain accounts only for one common purpose, and that common purpose is GST. So right now, present GST law says no need of maintaining the accounts separately. Maintain only one set of accounts which should comply the provisions of one tax, common tax, that is GST. This is a brief explanation about introduction. Now, the rules and procedure for maintaining accounts for GST transactions are as follows. So, GST law has given some hint regarding how to maintain, how to record the transactions for the purpose of GST. So what are the rules given? The first, maintenance of accounts. It is the responsibility of the owner of the business to maintain the accounts. So the accounts of GST transactions are recorded and maintained by the following persons. So who are the persons responsible for maintaining the accounts? The owner of the business, first one. Secondly, the operator of warehouse or godown which is used for storing goods. The operator of warehouse or godown where goods are stored, he has to maintain the accounts. Thirdly, transporter of goods and services. When goods or services are transported, transporter has to maintain the accounts. The first thing, who is responsible for maintaining the accounts of GST? First one. Second, place of accounts. Actually, where the accounts should be kept. The account should be kept at the place where the business is located. So wherever the business is located, there the accounts should be maintained. Second point. Third, audit of accounts. From time to time, GST has prescribed some financial limit. If the registered business crosses that limit, then compulsorily the accounts should be audited by a chartered accountant. So here, when the turnover of the business exceeds, time to time GST law will give the turnover. If the business crosses that turnover limit, then the business accounts must be audited by a chartered accountant. Then third one, nature of accounts. The registered business owner needs to maintain the following nature of accounts. So what are the nature of accounts the owner of the business or the registered businesses has to maintain? The first nature of accounts are accounts of production of goods and services. Most of the business are producer or provider of services. So every business owner has to maintain the accounts of the goods which are produced or the services which are provided. Second, accounts of inward and outward supply of goods and services. Inward and outward. Inward means purchases, outward means sales. So accounts should be maintained for all inward supplies as well as outward supply. Accounts of inventory or stock of goods. Accounts of inventory or stock, that should be maintained. Fourth, accounts of availing input tax credit, ITC. This is very, very important because the registered dealers or registered businesses will get the benefit of ITC. That means input tax credit. Already the business has paid the tax when purchasing the goods. So GST paid at the time of purchasing the goods is called input tax credit, and that input tax credit can be deducted from the output tax. So accounts relating to input tax credit, it is called ITC. Then accounts of output tax payable or paid. Then the taxes relating to output. There are two taxes, input tax and output tax. Input tax credit will be given and accounts related to output tax payable or paid, that should be maintained. Lastly, other prescribed accounts under the GST law. This is only an example of the accounts. Apart from this, the GST law may prescribe some other accounts to be maintained. So those accounts have also to be maintained by the registered businesses. So first I've explained you who are the persons who have to maintain the accounts. Secondly, where the accounts should be kept, place where the accounts should be maintained. Thirdly, audit of accounts. Next one is nature of accounts to be maintained. Last one is types of accounts. Now I'm going to explain you what are the different types of accounts to be maintained by the registered businesses. A registered business owner needs to maintain the following accounts relating to GST other than sales, purchase and stock account. These three are the compulsory, that is sales, purchase and stock. Apart from that, the other accounts to be maintained by the registered business is, first one, input, CGST account. Second, output, CGST account. Then input, SGST account. Output, SGST account. Input, IGST account. Output, IGST account. Three types of GST are there: central GST, state GST, and integrated GST. Integrated GST. So input output CGST, input output SGST, input output IGST. Then apart from that, electronic cash ledger cash ledger under government GST portal for paying GST. For paying the GST, the government portal is there. In that portal, we have to open the account, electronic cash ledger account, for paying the GST. And then other accounts. Apart from this, some other accounts have also to be maintained, like accounts of advances received and paid. Very frequently, the registered business will pay the advance or receive the advance. So a separate accounts must be opened for receiving or paying the advance money. Next one is accounts of stock inventory. Stock, separate accounts should be maintained for stock or inventory. Lastly, monthly production accounts, etc. So these are the different types of accounts GST requires that registered businesses must maintain. So in examination, very frequently a question will be asked regarding accounting of GST transactions. So this theory will be very, very important for writing the answer to this accounting for GST transactions. Now, one more topic I am going to explain you in this video is export and import. In the coming video, I am going to explain you the law regarding export and import, but right now you must know the meaning of the term export and import. It will be asked in short question. What do you mean by export and what do you mean by import? First of all, export. Export can be defined as a supply of goods outside the country. Very simple definition. Export of goods simply means selling or supplying the goods to another country, where the person of supplier belongs to one country and recipient of goods belongs to another country. So for example, in India, we are the supplier, we are the sellers, and the buyer is in America. So we are selling the goods from India and to the buyer, the customer is staying at US. So this is an export. We are supplying the goods. Similarly, goods are supplied to recipient outside the country, because the supplier belongs to one country and the recipient belongs to another country. In this transaction, the location of supplier is in one country and the location of recipient is in another country. Exports are again categorized into four. The first is exempted exports. The government has declared which exports are exempted. Second, taxable exports. Third one is exempted exports under LUT or bond. Letter of undertaking. LUT stands for letter of undertaking. So exempted exports under letter of undertaking or bonds. Lastly, deemed exports. So totally four types of exports. Exempted exports, taxable exports, exempted exports under LUT or bond. Last one is deemed exports. Now, the next topic is imports. It is opposite to export. That means when we sell the goods to other country, it is called export. When we buy the goods from other country, it is called import. So import can be defined as the goods which are purchased from other country. Example, we are the buyers and the seller is in America. So from America, the seller is selling the goods, supplying the goods, and we are receiving the goods. We are the recipient and the person in America is the supplier. It is called import. It refers to all inward supplies of goods from another country. In the case of imports, reverse charges are applicable. Remember, reverse charges means the recipient has to pay the tax. In exports or other taxes, GST, the seller, the supplier will pay the tax. But in case of imports, the recipient recipient has to pay the tax. That's why it is called reverse charge. So in case of imports, reverse charge are applicable. The recipient of the goods is liable to pay integrated tax to the government, IGST. The integrated tax has to be paid by the importers to the government. So these are the provisions. In this video, I have explained you accounting of GST transactions. How, according to GST law, how the transactions accounts will be maintained, transaction will be recorded. Secondly, what are the exports and imports that I have explained. Inshallah, we'll continue the next topic in the next video.